So good morning, everyone. I appreciate some people will be joining as we start, but I'm going to make a start because this webinar is due to last an hour today. So good morning and welcome to today's webinar, EU Exit and VAT Implications. For those of you who don't know me, my name is Anne White and I'm Head of International Trade at Thames Valley Chamber of Commerce. Sarah, if you just go to the next slide, I'd much appreciate that. So Thames Valley Chamber of Commerce is the accredited chamber for Buckinghamshire, Berkshire, Oxfordshire, Swindon and Heathrow. And we offer a wide portfolio of services for members and customers, especially specialising in global trade services. I have a team of 18 who do nothing but international trade. So, we welcome any inquiries relating to trading internationally into our chamber. A few housekeeping rules today. Before I hand over to our presenter, today's session is being recorded and the session will be available on our website, thamesvalleychamber.co.uk. I'd like to thank everyone for pre-questions that were sent in, but if you wish to raise a question today, then please do so in the Q&A facility and we will endeavour to cover as much questions as we can in the session today. I'm just going to turn off my camera, and I'm just going to tell you a bit about today's webinar. Today's webinar is being delivered as part of a collaboration between Thames Valley Berkshire Local Enterprise Partnership, Thames Valley Chamber of Commerce and the Thames Valley Berkshire Business Growth Hub, delivering a programme of information and advice to help businesses in Berkshire understand and adjust to the changes of EU exit. Today's webinar focuses on the changes to the VAT rules resulting from the UK leaving the EU. Whether you're a business involved in buying or selling goods or services between the UK and the EU, it is important you keep up to date with these changes and the options available to manage VAT arrangements and liabilities. Our presenter today is Steve McCrindle. He is Head of Indirect Taxes Partner at Haines Watts, covering the London and the M25 region. He has worked in this sphere for them for 11 years, and prior to this, he was a director at EY and a partner at RSM. He's also Global Chair of the Indirect Taxes at Geneva Group International, the 7th largest alliance network of accounting firms globally. He specialises in UK VAT. His team advise on UK VAT and international trade and customs. He started communicating with clients and his team colleagues and potential VAT consequences of Brexit in early 2018, assisting them with their VAT and customs advisory requirements, providing comfort where there was doubt and bespoke solutions where there are problems and issues. He and his team work on the post-Brexit issues continues. So I'd like to welcome Steve and hand over to Steve for today's presentation. Thank you.
Thank you, Anne. Excuse me. If you could go to the next slide, please. Based on Anne's background there, I think a lot of businesses in the UK have waited, and possibly in some cases waited too long to sort out their supply chain into the EU, mainly on the basis that the government was promising a deal, and then there wasn't a deal until the last minute, and that deal was only on zero tariffs for customs duty purposes. So a lot of businesses are behind the curve on getting their VAT and customs arrangements in place. And to the slides, the big Brexit change is that the new UK is no longer part of the EU and is therefore not in the single market. I mean, that is a simple statement of fact. What leads from that is that the UK is now treated by the EU as a third country. So to the EU, we're just like the USA or China, Turkey, etc. At the outset of the discussions within government and revenue and customs how are we going to treat goods and services from a VAT perspective once Brexit occurs, HMRC themselves foresaw very little need for change in the UK's VAT treatment of the supply of services, and indeed little has changed. We are seeing things that have changed, and some examples of that would be tour operators. They historically would have been subject to an EU-wide tour operators margin scheme. The consequence of us not being in the EU is that there is no EU-wide tour operators margin scheme which the UK can be part of. So that scheme has had to change for tour operators. Intellectual services supplied B2C to private individuals, and this could be accountancy or legal services. So private individuals who are resident within the EU used to be subject to UK VAT at the standard rate, but from the 1st of January, they are not. They are zero rated, or outside the scope is a better way of describing them, but they have the effect of being zero rated. For financial services institutions and similar, there is increased scope for VAT recovery on specified supplies. That is because supplies in the EU used to be, to customers in the EU, used to be treated as exempt from UK VAT. Now they're not. They carry the right of recovery. They were exempt without recovery. Now they carry the right of recovery. The EU VAT MOS scheme doesn't work for UK businesses now. We're not part of the EU. So that creates a problem for people providing broadcasting, telecommunications and e-services to customers within the EU. But to move on from services, as little has changed there, the reverse is true of goods. Most of the VAT changes involve supplies of goods. The UK, on leaving the single market, has lost simplifications for goods, and the consequence of that is that EU acquisitions are now imports, EU dispatches are now exports. Next slide, please. Next slide, please. Thank you. Sorry, go back. EU triangulation doesn't work for UK only VAT registered businesses, and margin schemes which affect people selling second-hand goods, works of art, collector's items, things like that. That was an EU scheme, and it doesn't work now for UK VAT registered businesses. Imports into the UK, there has been an actual improvement there in that HMRC has scrapped the old import VAT regime. And from the 1st of January, they've replaced it with something that is referred to as PVA, which stands for postponed VAT accounting. You do need, if you're importing from the EU or elsewhere, you will need a UK VAT registration and a GB AORI number. It should also be remembered that in the UK, only the owner of goods has the right to recover import VAT. The interesting thing about the postponed VAT accounting system is that it doesn't involve the outlay of VAT to Revenue and Customs. There is no cash paid over anywhere and no cash to be recovered. It is dealt with by adjustments on your VAT return. So if you've been declaring acquisition tax on your VAT return or the reverse charge on your VAT return in the past, the PVA adjustment works in exactly the same way as that. And for those of you who are as old as I am, this is on all fours with the system we had in the UK up until the 31st of October 1984, which was called Postponed Accounting System. PVA and Postponed Accounting System are on all fours with each other. For exports out of the UK, B2B, business to business, you can still zero rate exports of goods. But now, instead of just putting your customer's VAT, EU customer's VAT number on your invoice, that isn't relevant anymore. What you need to do is obtain and retain primary evidence of export. Primary evidence of export would be something that shows that the goods you say on your invoice have left the UK, have indeed left the UK, or arrived at their destination. As a matter of fact, and these are old rules, but I think they're worth stating, that goods must be exported from the UK within 90 days of the supply. If they are not, Revenue and Customs have the right to standard rate the supply. Extensions to the 90-day period can, in certain circumstances and on application to HMRC, be obtained. I myself have obtained extensions to the 90-day rule where there was a power station. In this particular instance, there was a power station in Kent being dismantled and bit by bit being stored on board ships, and those ships were to sail to Saudi Arabia, and the whole process took well over 90 days, and Revenue and Customs allowed that extension. Exports out of the UK to the EU B2C, the rules I've just mentioned for B2B will apply until the 30th of June 2021, and then the EU is set to change its VAT regime. It'll change for goods being sent to the EU B2C, and it'll change also where there's an online platform involved in the supply chain. I'm not going to dwell on this subject because it's in the future, but if you're involved in this type of trade, you need to take advice. Okay, next slide, please. For imports into the EU, if you are an exporter from the UK exporting goods to the EU, you will likely have to register for VAT in one or more of the EU 27 jurisdictions if your Incoterms are DDP. So Incoterms, for those of you who aren't familiar with that term, are things like ex works, delivered duty paid, delivered duty unpaid. DDP is delivered duty paid, which that means that you as the you are the importer into the EU, and you pay any customs duty and any import VAT due in the EU. Obviously, to get that import VAT back, you have to register for VAT in the EU member state concerned. You will also have an obligation to register in an EU member state if you are drop shipping goods into an EU member state. And this happens where you're involved in a ABC transaction chain and you are party B. Party A is your supplier, party C is your customer. But the goods are delivered from party A to party C. So your supplier delivers the goods to your customer. So if party A and party C are all in the EU, your goods have never left the EU. Therefore, by definition, you are in the EU when you supply those goods, and that gives you an obligation to register somewhere. The same happens if your goods are destined for Northern Ireland from an EU jurisdiction. And the EU Northern Ireland wears two hats, one of which is an EU hat. So you can get involved through the Northern Ireland Protocol in having to register for EU VAT through the Northern Ireland, and these are called XI VAT IDs and XI AORI numbers. I'll come back to that later. If you're exporting goods B2C into the EU, into one of the 27 member states, and you're already registered there, then DDP works in a different way. It actually works to your advantage because it avoids double taxation. And again, I'll come back to that subject a little later in the slides. What have I been finding out there? What is the big issue? I think that logistics is the big issue. It isn't VAT and it isn't customs duty. Logistics is the #1 issue for UK businesses doing trade with the EU. So my advice would be, don't put a structure in place from a VAT or customs duty perspective first. Rather, find a carrier, a freight organisation that can fulfil your logistics and delivery needs first. If the Incoterms are DDP, such that you have to register in the EU, some of these carriers can also act as your VAT fiscal representative and indirect customs representative in the member states you're importing into. So you can get all your VAT and customs duty solutions from your carrier. So that should be your first port of call. Structuring from a VAT perspective, it still needs to be done with logistics as the driver. That is the important thing, getting your goods to where they need to be delivered. But what we're seeing and what we're helping clients with is mainly the clients wanting one point of entry into the EU 27. This is one entry point and one VAT registration, rather than multiple entry points and multiple VAT registrations. There are issues around UK entities proving to EU customers that the goods are customs cleared and already in free circulation with the EU. So we're also helping clients set up EU entities to get around this issue. The issue is predominant where a UK entity is importing the goods into the EU. But if you use an EU entity, so a Dutch BV, for example, people immediately recognize it as Dutch and they don't ask about customs clearance and whether the goods are in free circulation. I mention the Dutch because most of them speak English. And of course, Republic of Ireland is a popular jurisdiction too. They're English-speaking countries. Next slide, please. So a very popular question, what about Intrastat and EC sales lists and all that? Well, from the 1st of January, for supplies made from the 1st of January, there's no need to complete EC sales lists. There's no need to complete Intrastat supplementary declarations for arrivals or dispatches of goods. You don't need to enter your EU customers' VAT number and country prefix on your invoices. And you don't need to annotate your invoice reverse charge supply or similar anymore. No harm if you do those last two things, but you don't have to do it. And that is the rule on Intrastat and sales lists and invoicing requisites, unless you sell or move goods from or via Northern Ireland into the EU. And when you do, the Northern Ireland Protocol rules apply. So I mentioned earlier, Northern Ireland wears two hats. It wears a UK hat and an EU hat. And in certain circumstances, a UK business may need a Northern Ireland XI VAT ID and XI EORI number, which is the EU identity for Northern Ireland. I think they chose XI instead of NI because NI is too much like the Netherlands prefix. Nothing more to it than that, but it is an odd one. The other thing to remember here is if you obtain an XI VAT ID, it will be exactly the same as your UK VAT registration number. You apply for it with Revenue and Customs, and the only difference is instead of having a GB prefix, it will have an XI prefix. But the XI VAT IDs appear on the EU's VISE VAT number checker. So your EU customers can see you are effectively VAT registered within the EU via the Northern Ireland Protocol rules. Next slide, please. And I had some questions about VAT MOS. VAT MOS is available for supplies of services, BTE services, that's broadcasting, telecommunications and e-services, to B2C customers within the EU. That's how it used to work anyway. It doesn't work anymore because we're not members of the EU, as I mentioned earlier. So to avoid multiple EU 27 VAT registrations, So having to register where your customers are within the EU. What you should do is choose one EU member state in which you register for non-union VAT MOS. So you just select a country. I would suggest an English-speaking country, and you register for VAT MOS there. Ireland would be a good location because they don't require you to have a fiscal representative. Apologies if this webinar hasn't covered what you wanted it to cover. It's a 15-minute presentation-ish. Some of the questions were about how you account for things and customs duty. I do neither of those because I'm merely a VAT consultant. Consequently, because of those two factors, the presentation needed to be kept to solely VAT and generic. But I think I've covered about 90% of the pre-submitted questions from Thames Valley Chamber of Commerce members, but I'm happy to discuss anything: VAT, customs duty, supply chain, accounting, whatever. I have a team that covers all of those subjects, so quite happy to go offline and discuss these with people, and my contact details are on that slide if you need to get in touch with me or wish to do so. So thank you very much for listening, and I'm available for questions now. Thank you.
Thank you, Steve. So we've got questions coming in quite rapidly now, so that's always good. So I'm just going to go through those, and hopefully we'll be able to get through some of them at least. So you mentioned, obviously, you mentioned quickly with regards to services. So that still people are asking what is the VAT impact on providing services to EU countries by UK registered companies?
Yeah, the question, I don't know whether it's supplies of services B2B or B2C. There's a difference in treatment, but essentially for services, nothing much has changed. What you were doing before Brexit, you should still be doing afterwards. There are only in a few areas that we're finding things have changed. I have a client that is heavily into the legal business, arbitration in particular. It's a big organization. It supplies arbitration services to non-VAT registered EU residents. Before the 31st or before the 1st of January, I should say, it used to charge VAT at the standard rate to EU residents, non-registered residents. From the 1st of January, its supplies are zero rated. So we're seeing these little quirks, but for 99% of businesses, there should be absolutely no change at all. So
that particular person just actually said it's B2B.
Yeah, and what are the services? Do we know? What is?
I'm sure he'll tell us at any moment soon. Consultancy services.
B2B consultancy services are outside the scope of UK VAT. You treat them as though they were zero rated. If you're VAT registered, you're entitled to recover the VAT you incur on costs in connection with making those supplies. Exactly the same as it was before Brexit.
Fantastic. So a couple of people commented they understand there's still the need to submit incoming interest stats until the 31st December 2021. Is that correct?
Well, I'm seeing that being stated. My old firm EY has stated that, and I read something the other day that stated 6 months. And I had a conversation with a client the other day who said they'd been told 1 month. They'd read it somewhere and spoke to somebody and they said 1 month, but I can see absolutely no requirement for that unless you are registered as part of the Northern Ireland Protocol.
Okay, so I mean, I had heard as well that different times. So what we will do as a chamber, we will get definite clarification on that for those.
No, I'll help with that, because
Fantastic.
you know, where there's a lot of doubt, it makes you consider whether the information you're working on is correct or not. So
we'll take that away and come back to those people who have mentioned that. So
yeah,
we also have.
It could be that UK government's done a deal with the EU on passing trade statistics to them.
Possibly.
But that message hasn't filtered through yet. Revenue and Customs are still updating the data that they put in public notices and on show to the public on their website. So there could be something that's not in the public domain yet.
Okay, we have another customer that's saying, is VAT charged on carriage of goods? The goods being 0 rated, so carriage, VAT should it be charged on carriage?
Again, it shouldn't. If it's goods leaving the UK for the customer, so it's that freight on leaving the UK and being carried to the customer. The customs value would include carriage, freight, insurance, and from a VAT point of view, the whole supply would follow the liability of the goods. So it should be that if the supply of goods is 0 rated, the rest of it is 0 rated too, because it's part of the value of the goods.
Fantastic. So I'm just rapidly running through the copious questions that are coming in now. Can we just reiterate the point about if they need to register? They're dealing with a lot of countries in Europe. Do they need to register for VAT in every country, or is it just one particular?
It depends. It depends what the business is doing. I mentioned before in the talk that we have customers that are selling goods B2B, and they've got customers in all 27 EU member states. And if they send those goods on Incoterms other than DDP, and they're shipping the goods direct into the member state concerned, they would have no liability to register in any member state, because the customer has the responsibility for accounting for any customs duty and local VAT on the importation. However, if they're shipping to those 27 member states DDP, then they are responsible. You know, the UK business is responsible for paying any customs duty due and the local import VAT. And the only way to get the import VAT back is to register for VAT in that country. So you can find yourself having to register for VAT in multiple EU member states. However, what I'm doing with a lot of my clients is looking at single point of entry. So if you're using organizations like Kuehne + Nagel, FedEx, DHL, these organizations can move pallets or consignments of parcels on individual parcels on pallets to one EU member state, send them over DDP, enter the goods into free circulation in that one member state. So enter them into free circulation within the EU in that one member state, pay any customs duty due in that member state, and then any VAT due in that member state, and then move the goods on as intercommunity supplies from that state. So you would VAT register potentially in one member state, and all of you now got goods in free circulation within the EU, and they're being delivered around the EU from one EU member state. So it puts you in the position you were in before, when the UK was part of the EU. A favourite country, there are EU member states that charge import VAT outright. There are only 5 left. 4 of them are big ones: France, Germany, Italy, and Spain. All physically charge import VAT. Cyprus is the other one. Ireland did, but it has decided to copy the UK, and from the 1st of January, Ireland, the Republic of Ireland, will use postponed accounting, the same as the UK, but in the Republic of Ireland, you have to apply to use it. Okay, it isn't automatic like it is in the UK, you apply to use it. But member states where you incur VAT, best to avoid them. Go somewhere where you don't have to. So what I've been doing for quite a few clients is getting them to talk to their logistics provider, because put logistics first. Can they ship the goods to Rotterdam? And can they then cross-dock the goods there, break the pallet and send goods around the EU from there? And if the answer to that is yes, and the price is a good price, then we get the client to appoint a VAT fiscal representative. That could be the carrier or it could be a third party. The same with the customs representative. Ship the goods into the Netherlands. If you've got a limited or general fiscal representative in the Netherlands for VAT purposes, you don't have to pay import VAT. As a foreign business, when you make a supply to a Dutch business, you do not charge VAT on that because the customer has to account for VAT under the reverse charge. And if you move goods outside of the Netherlands, it's a zero rate, it's effectively a zero rated supply. So if you ship goods into the Netherlands to one point, enter them to free circulation there, pay any customs duty due there, there's no VAT at all in that transaction chain for our clients. And the administration of that structure is, from a VAT point of view, is handled by the fiscal representative. It's the fiscal representative's VAT number that goes on invoices as well. So it's beautiful. It's outsourced and it's beautiful. There's no VAT to worry about there. So that is an example of what we're doing for clients.
Okay, wonderful. Somebody's asked, how can you find out the import tax charge for each of the member states? There is a government tool which is quite useful for that. It will give you the VAT rates for goods so specific to your product and your tariff number.
And if you want to know, if you think something, that's quite right, Anne, but if you think something's about to change, just look at one of the big four accounting firm websites, because they do updates. Avalara is quite good as well at giving updates on that. Haines Watts isn't. I'm too busy.
But what we'll do is we'll send out, when we send a copy of the presentation, we'll send out links to some of these useful tools as well, because they are very good. I'll give the government their due. They've produced a couple of useful digital tools to help with this sort of thing, and the duty rates as well. So I'm not saying they're perfect, but I'm saying they go a long way to assist. Okay, I'm just running through. They're coming in. Do we need a EU EORI number to export to our customers in the EU B2B? We have had a problem shipping to German customers who are not VAT registered in Germany, and currently neither are we, but that we're in the process of resolving that. Okay, well, I would say if you're shipping goods to the EU, some of those goods will come back, returns, maintenance, whatever. And to ship the goods back to the UK, you need an EU EORI number. So I would say get an EU EORI number. And there are member states that are easy to get the numbers from, and there are member states that are difficult to get the numbers from. So again, somewhere like the Netherlands, you know, these guys are open for business in the Netherlands. They want to, what the Netherlands found, and much to their surprise, they thought Germany was their biggest trading partner. But what they found when they did a survey about a year or 2 years ago was that the UK is their biggest trading partner. They want to open up the Netherlands to the UK. So they're open for business. If you want an EORI number, a non-registered EORI number, try the Netherlands. And I can help you with that. I've got contacts there. Thank you. In terms of sending goods to Germany to a customer that hasn't got an EORI number, that is a difficulty, because that customer of yours needs an EORI number.
What I have found with another client is they had that issue in 4 EU member states, Finland, Greece, Italy and Germany, I think it was, where customers wouldn't obtain an AORI number, and that client had to register in the EU and send goods to itself DDP so that it could get a presence in the EU and get its own VAT number and its own AORI number. And again, that's an EU AORI number as well, I might add. And again, we use the Netherlands just because it's much simpler than France, because France charges import VAT, simpler than Germany because they charge import VAT. The Dutch don't if you've got a fiscal rep there.
So another question, if we sell to a sister company in the EU and ship 0 rated, when they sell to another country in the EU, who do we then drop ship to from the UK? But, oh, sorry, I've read that wrong. When they sell to another company in the EU, who we then drop ship to from the UK? Did that make sense?
Yes.
Yeah.
So this is what I call triangulation, or an ABC transaction, because our invoice goes to our sister company in the EU and they invoice the customer. So that's ABC, but the goods are going direct from the UK to the customer. Yes?
Yes.
Well, we can still 0 rate that supply if the goods leave the UK.
Okay.
But you can get into difficulties with that. For instance, if your supply, again, I know I keep banging on about DDP, delivered duty paid, but if you're sending the goods DDP, you may have an obligation to register for VAT in the EU.
So really, they need to look into that in a bit more detail, don't they?
Incoterms are massively important now.
Yes.
I mean,
yes.
even DAP Incoterms, if you agree to deliver DAP to a customer, but you don't send the goods to their country, so if they're in Germany and you send the goods DAP to France, you'll get charged French import VAT. And that's no, you've got to be very, very careful with Incoterms.
Okay, so what is the most effective way? We've had a couple of questions about this. Most effective way to identifying the PVA transactions within the period of the import to enable accurate reporting on the relevant VAT return, as MSS reports are not available until the middle of the following period.
Yeah, MSS is great for providing evidence, but it is a little late for needs, especially in these days of making tax digital. Basically, you need your accounting system to do the work for you. I do know that Sage and Xero have been working on tax codes within their accounting systems where you can put these transactions so that you're accumulating the data that you can use to identify EU exports, EU imports, etc., or any imports these days for PVA purposes, because it doesn't just apply to the EU, it applies worldwide. For PVA purposes, I would say that if your accounting software doesn't allow you to do that, then you need to be able to do an extraction report from your accounting system. So that would be talking to your IT providers and getting an extraction report out of your system that gives you the that identifies the customers, the suppliers rather, identifies the suppliers and the value of the transaction. And if the value of the transaction isn't in GBP, that it converts the foreign currency to GBP as well, to give you a UK sterling total of imports in an accounting period.
Wonderful. So another one, if I sell the goods to a UK company and are asked to ship the goods to Germany, who is responsible for the VAT?
So can I just recap that? We're buying the goods from a UK company.
Selling to a UK company.
We're selling to the UK company, okay?
The UK company has wants them to ship the goods to Germany. Who is responsible?
Who's responsible? Well, we're selling to a UK company.
Mhm.
Yeah.
Yep.
But we are shipping to Germany.
Yes.
The UK UK customer is responsible. Our supply is from A to B. Is to the UK customer.
Fantastic.
Again, Incoterms could come into play here, but ostensibly we're supplying a UK company with the goods, and when we do, the goods are in the UK, yeah, and then the goods are shipped. So it is even though we've arranged the shipment, it's the other company that's moving the goods and providing title to the customer in Germany.
So I'm just working my way down to try and get some that are a bit more general, because there's some quite specific questions coming in, which maybe we can answer at a later date. Or obviously Steve, as he said, is open to people contacting them for questions. So somebody's just saying, if they've heard from you correctly, Steve, DAP to Germany via France would incur French import VAT. Why is this?
If your carrier enters the goods into free circulation in France,
yeah,
there has to be a through movement of the goods to Germany for them to be entered into free circulation in Germany. But what we're finding is that DAP is a particular problem on this, is that the carriers sending the goods from the UK to France and entering the goods into free circulation in France. There is a lot of problem with carriers at the minute that they can't fulfill the logistics requirements of businesses, and also that they're completing the export/import declarations incorrectly, ticking wrong boxes. The hold up at ports of goods going, particularly in the first couple of weeks after Brexit, goods going into France and the Netherlands, was predominantly to do with wrong paperwork. But we've got a number of clients that have ended up paying customs duty and VAT in France when the goods weren't destined for France, when they've sent them DAP.
Yes, we do know as well. You're totally correct there, Steve. There's been a lot of issues with regards to transport documents, transit documents, and those sorts of things. So obviously, if there isn't a transit document, then those goods do go into that country because they're not allowed to transit out. So it is important that that the forwarder or whoever's transferring logistically the goods does have that correct paperwork.
Well, what we are advising clients is that they get an agreement in writing with the carrier. This is what we want you to do, and this is how we want you to do it, and you agree to that. Yeah.
Yeah.
And if you can, get the carrier to indemnify you. If you lose 20%, 21% in the Netherlands, 20% in France, 23% elsewhere, 25% in Scandinavia. That's a lot. If you can't recover that VAT, that's a big loss. That could be your profit margin. So maybe also, if you can, get an indemnity out of the carrier. We've agreed that you will carry to X place and deliver there. You've got to get the paperwork right on these terms, and if you don't, you're at fault.
Yeah, good point.
Yeah.
Somebody's actually just messaged in to say they received their request from HMRC to submit their interest stat this morning. So
really, this is interesting. I'm learning now. Is it
coming out?
Is it a request for the December Intrastat?
Hopefully Sue will respond to that one. Sue's also got another question. We are registered for VAT in Irish Republic, solely UK business location. Sorry, have been for many years as supply B2C under distance selling. We have EU, Irish EORI number and an XI number, EORI. Do we need to bring goods into the Irish Republic? Do we bring goods into the Irish Republic under our Irish VAT number or our XI number?
If the goods are going direct to the Republic of Ireland from the UK, then I would say it would be under the Irish number. And that would be especially true if the goods were sent DDP.
They go via Northern Ireland.
Then you should have an XI VAT registration number.
Which she does, I think. Yeah. So they should be using, which one should they be using? The Irish one or the XI one?
The goods are going B2C.
Yes.
The goods are going through Northern Ireland, B2C into the Republic.
Yes.
Is the, I don't know the name of the business, is it registered for VAT MOS in the EU?
No, she's just come back and she said, sorry, it's actually B2B, not B2C.
Okay.
No VAT MOS.
Okay. In that case, if the goods are being transshipped via Northern Ireland, yeah, the supply is effectively UK to UK. So Northern Ireland has a UK hat, and then it's XI, which is EU, Northern Ireland's EU hat into the Republic. So the actual export from Northern Ireland into the Irish Republic would be on the XI VAT ID and XI AOE number.
Oh, it all sounds very complicated to me, but maybe so we can put you in touch. We can put Sue in touch with yourself. And,
I think so. Sue's asking a lot of questions, so I think we need to talk.
Yeah, indeed.
One thing I would add: don't be put off. Don't be put off by the Northern Ireland Protocol, because I have used it 3 times now to get clients a VAT ID in the EU. And all it is a UK VAT number with an XI prefix instead of a GB one, and you apply to Revenue and Customs in the UK for it. But you effectively have an EU VAT registration number. So if you're involved with Northern Ireland or moving goods via Northern Ireland into the EU, think about getting yourself set up XI-wise, and you might actually be obliged to. Yeah, so there's a thought.
So if we just a couple of final questions, and I know we've got a few coming through, but we can't fit them all in today, unfortunately. If you sell goods to a UK customer but ship to the EU for the customer, would you charge the VAT on the invoice to the UK customer? I think yes. We spoke about that one, didn't we?
Yes.
Fantastic. And just one more coming through. There's just another couple of comments. A couple of people have said they've had it's 12 months Intrastats for EU UK trade imports, which has been confirmed by HMRC. So which is great.
I that's great. I mean, we're all learning, aren't we? There are things. I was saying to one of my team yesterday that there are things coming out the woodwork every day. You know, something new every day. Things we thought about and didn't know the answer to, and then other things that we hadn't even considered. But it was the case that Revenue and Customs told everybody that they wouldn't have to complete Intrastat declarations, and I haven't seen anything subsequently that was official and categorical saying they did. This is good. I've learned something today.
Fantastic. So just one last question. Life coaching, UK to EU, national, B2C, does it attract VAT?
Life coaching, B2C. So it's from the UK to
the EU.
I think that would be treated as a consultancy service.
Yes.
So it would be outside the scope of UK VAT.
Okay. So I think that's the last question, Steve. We've got through the questions. There are some, but we can look at those another day. So Sarah, can you just bring up the slides, because I just want to mention a couple of other things as we move through. So I'm just going to close off today's session. We've time goes very quickly. I just want to say a couple of things with regards to our next webinar in the EU exit series, and it is on EU exit trade agreements and rules of origin, certainly an area which we've been inundated with inquiries about. So we've answered your responses and are putting on a webinar to cover all of those aspects. It's very confusing. And next slide, please, Sarah. And then I just wanted to highlight again that we are operating this this opportunity under the new collaboration between the Thames Valley Berkshire Local Enterprise Partnership, the Chamber of Commerce, and Thames Valley Berkshire Growth Hub, Business Growth Hub. And if you are a Berkshire company and you're wanting free one-to-one advisory session on anything to do with the EU, being delivered by the Growth Hub or us at the Thames Valley Chamber, we cover the customs procedures and anything relating to that, then please give us a call, click onto the website, and we'll be there to help you. So please, if you do that, as I said, you get free advice up to, I think, about 3.5 hours free advice. So we look forward to receiving your inquiries. So I'd like to thank you. So I'm just going to round off today. I'd like to thank Steve for answering all of the questions that are coming in, have been coming in, and I'd like to thank you all for attending, and I hopefully look forward to seeing you all on another webinar in the future. Thank you very much. Have a good day.
Thank you all. Thanks, Anne. Thanks, Sarah.
Thank you.